if anybody want to go for investing in the capital market or money market, so definitely they want to go for demat account. What insurance company? Insurance company, they majorly we can identify, one is life insurance and one is general insurance. Loan company, which is providing a loan for the needy people. So the loan company refers to the financial institution or business that specialize in the providing a loan. Leasing allow business to use asset without the upfront cost of purchasing them outright. Hello everyone, a warm welcome to one and all. I am Natesh, lecturer in commerce, Vidhyaashram First Grade College, MYSURU, the Temple of Excellence. We are in the Unit 5, Session 1, 5th semester BCom, Financial Institution and Market. The chapter name is Non-Banking Finance Company and Forex Market. And today my agenda, you are getting more clarity about the non-banking. So the first one, meaning and role of MBFC. MBFC stand for Non-Banking Finance Company. Okay, next to importance of MBFC and types of MBFC and insurance company. You are getting more clarity about the insurance company meaning, the functions of insurance company, the loan company meaning and functions. Next to investment company, which is meaning and functions. Leasing meaning and functions, hire purchase meaning and functions, okay, housing finance meaning and functions, last one Chit fund meaning and function. Coming forward here, the meaning of an MBFC, which is nothing but the banking operation regularly, traditional banking, what activity are doing, like accepting deposit, lending money. So in this case, non-banking, which is not doing the regular activity, regular transaction, what they are doing a banking service. Okay, so the non-banking finance company or financial institution that provide banking service similar to the traditional bank but do not hold the full banking license, okay, which is not holding a banking license. They operate intermediator between traditional bank and customers, okay, which is an intermediator between the customers and traditional bank, offering a wide range of financial service. There are financial service, whatever, which is coming under the finance service, okay, including lending, investment, asset finance, wealth management, and more. Okay, so moving forward, the first one, the role of MBFC. The first role is a financial intermediation, which is acting like a traditional bank as well as customer. In between, they are acting as an intermediator. MBFC play a crucial role in bringing the gap between the traditional bank and an underserved specialized market, which is underserved specialized market. The second point, diverse financial service, which is giving a service to the customer. NBFC offer a variety of financial product and service, okay, such as loan, leasing, hire purchasing, and investment product. Okay, moving to the third point, market expansion. We are expanding our market. NBFC contribute to the growth and diversification of the financial sector, which is also a major role taking. Next one, risk management. They try to go for managing the risk. NBFC often offer risk management service, including hedging and derivative, which is related to stock. Okay, so help to client managing finance risk such as interest rate risk and currency risk and commodity price risk. Okay, moving to fifth point, Forex market involvement. So NBFC, which is involved in the Forex market, which is a foreign exchange. They facilitate currency exchange, offer Forex advisory service. Okay, anybody are going for investing Forex, and providing hedging solutions to the client engaging in the international trade or investment. If anybody are going for international trade or investment, so which is providing advisory role here. Next, moving to the importance of MBFC. The first one, financial inclusion. Okay, so each and every country are bothering about the financial inclusion. Okay, so we are finding the progress. We need to progress the nation. MBFC play a pivotal role in the promoting a financial inclusion by reaching out the segment of the population that might not have access to traditional banking service, because those who are not getting the benefit from the traditional bank, so NBFCs are providing an opportunity. And next one, diverse product portfolio. MBFC offer a wide range of financial product and service so that they are trying to go for investing. including personal loan, vehicle loan, housing loan, microfinance, asset finance, and more. Okay, next moving to third point, competition and innovation. In the finance market, there are too much competitions we are facing. So here also the very important role in the presence of NBFC in the financial sector foster competition which drive the innovation. So there are latest innovative finance product are coming. So because of NBFC. Next one, niche marketing. Okay, MBFC often specialize in this serving niche market or industry such as real estate, infrastructure, and agriculture. So, which is coming forward. Next one, quick decisions making. So here we can find out the quick decisions. MBFC are known for the quicker loan approval process so that they are not delay. Whenever the finance support is required for any microfinance or asset finance or housing finance, the fund is immediately which is approved because of decisions. Okay, so compared to the traditional banking. Next, risk diversification. So MBFC is majorly taking a responsibility for risk diversification. The presence of NBFC helped to diversify the risk in the financial system. Under financial system, there are a lot of systematic, non-systematic risk or market risk, okay, interest rate risk. When one sector or institution face economical challenge and other sector in the institution maybe remain stable, so that they are trying to balance with the using a risk. Next, types of NBFC. There are different types of NBFC we can find out. So here the major one, the asset finance company, which is mainly focusing for asset. So asset AFC primarily focus on financing the purchase of physical asset like vehicle, machinery, equipment, and other infrastructure related equipments. Okay, next one, investment company. Investment company which is coming under the NBFC category, because if anybody want to go for investing in the capital market or money market, so definitely they want to go for demat account. Investment company primarily invest share, stock, bond, debenture, and other security issued by the government or corporation or private. Next one, loan company, which is mainly focusing on the providing a loan. LC provide a loan and advance to individual as well as businessman. They may specialize in this specific type of loan such as personal loan, business loan, and vehicle loan, and etc. Next one, infrastructure financing company. Infrastructure finance company, which is a IFC, which is focused on financing a infrastructure project, which is a road, bridge, power plant, and airport. Okay, there are too many, which is very essential for any country. Next one, central bank, complete regulation policy or monetary policy which is taken care by central bank, which is nothing but the RBI, govern monetary policy and issue national currency, which is called RBI. Next one, microfinancial institution, which is mainly focusing for micro activity. Microfinance institutions, okay, provide financial service including small loan and saving account, low income individual and micro entrepreneur, those who want to start. Next one, systematic important core investment company. Systematic important core investment company are the category of NBFC that primarily hold the investing in the equity shares or group of company. Okay, so which is completely holding the group of company. Moving to the next concept like insurance company. Okay, what insurance company? Insurance company, they majorly we can identify, one is life insurance and one is general insurance. Okay, so they are mobilizing fund from these investor or small savers. Insurance company are financial institution that provide risk management and financial protections to the individual as well as business through the sale of insurance policy they are selling. Here the insurance company is a sponsor. Okay, the policy holder, they are trying to go for investing, they're paying a premium. This policy offer coverage against various risk, uncertainty, providing a mechanism to individual and organization to mitigate the potential financial loss in the future, whatever is happening like accident or death, okay, any major losses. Okay, so they can recover doing a insurance. Moving forward, next, the functions of insurance company, the main functions is the risk pooling. Okay, if the small saver, they try to go for investing in the insurance company, so in the future loss they can go for future uncertainty, we can reduce. So the risk assessment and underwriting, which is taking for risk assessment and underwriting. Next one, premium collection. So the major role is the premium collection from the policy holder. Next, claim processing and settlement. Claim processing in the sense, actually, once they are met an accident, the nominee are getting benefit, will be starting the claim process, the claim application they want to fill. So the insurance company are going for processing or going for payment, final settlement. The investment management, they are trying to manage the whatever they're getting a premium from the policy holder, so which is going for reinvesting for the different projects. Which is investment management. And regulation compliance. So this particular insurance company or insurance regulation company authority, okay, which is IRDA. Product development and innovation. There are different premium insurance products are coming, so which is majorly taking care. Moving to the loan company, meaning loan company which is providing a loan for the needy people. So the loan company refers to the financial institution or business that specialize in the providing a loan to individual, businessman and other entities like government. This company exists for facilitating borrowing and lending the activity. They are not accepting the deposit, they are accepting the deposit, helping individuals and organization access to fund they need for various purpose. Okay, so because of business they need finance support. Next, the functions of loan company. One is the major functions is the lending money. They are lending, okay, money. And the next one, risk assessment. Here they are managing the risk. Next, interest and fee. Okay, obviously they want to collect interest, how they want to fix the interest rate. Next, loan serving. They are providing a loan facility to individual as well as business and other entity. And customer service. Whenever the customers are expecting a service from the loan company, obviously there are different types of service are provided. Next, compliance with the regulation, which is also majorly regulated. Next, investment company, which is talking related to just as an individual, as a business, they are trying to go for investing. So obviously they want to approach for the investment company. So investment company, also known as a investment fund or asset management firm, or financial institution that pool together capital from the various investor, those who want to go for investing, to the create a diversified portfolio for asset, whatever they collected, whatever they accepted, which is going for the investment. This asset can be include a stock, bond, real estate and other security, okay, debenture, bonds. The functions of investment company, the major functions is a portfolio diversification. Whatever they are getting a fund from the different investor, which is again reinvested for other, that is coming under the portfolio diversification. Next, to professional management. Here the professional skills, professional managers are managing the fund. Definitely we need to choosing a right investment. Next one, liquidity and accessibility. Whenever liquidity means easily converting into the cash, accessibility, easy, we have access. Next, economic of scale. Economic, we can find out the progress of economics, so that's what we are pooling the money. Next, regulatory compliance, which is also regulated compliance. Next, distribution of income, the income whatever expecting from individual or investor, so which is going for the distribution for other purpose like project or infrastructure. And the risk management, any product, finance product which is connected for risk, obviously. And the tax efficiency, we can get tax efficiency. Moving to leasing, meaning the leasing is a financial arrangement in which one party, that is leaser, provide an asset such as equipment, machinery or property. Okay, if I have own property, own machinery, definitely I can go for leasing for lessee. Okay, other party, the lessee, for a specific period, he will go for leasing for 5 years or 10 years because he don't have any machinery. So that's what he can approach for the lessor. The lessee may regular payment to the lessor for the use of asset, because lessor are providing him equipment or machinery. Okay, for lessee is getting a benefit. Obviously want to go for periodical payment. However, the ownership of the asset remain with the lessor unless a purchase options in the exercise at the end of the lease term. Okay, so after payment only final the title is transferred to the lessee. Next one, the functions of leasing. The first one, cost effective access to asset. Cost effective, because any particular asset the cost is very important. So leasing allow business to use asset without the upfront cost of purchasing them outright. That means we don't want to invest complete money. We are getting a benefit just going for part payment. This is particularly advantageous for the company that need expensive equipment but prepared not to tie up with their capital. Okay, so they just want to expecting a productivity from the particular machinery. Next one, flexible term, which is according to the agreement what they are giving a terms. Leasing arrangement often offer flexibility in the terms of duration of lease and the structure of the payment also clearly specified in the agreement. This can be a beneficial for the business with varying needs and financial constraint, because the businessman is facing financial problem. Obviously you can approach with the help of leasing. Next one, maintenance and upgrades. Obviously we can go for finding the maintenance and upgrade. In some lease, the lessor may be responsible for maintaining and upgrade of the lease asset. Okay, whatever the completely the responsibility are taken care by the lessor, because the title is belongs to lessor. So you want to go for maintain and upgrade the machine or equipment. This can relieve the lessee from the burden of this cost of maintenance. The cost of maintenance will be taken care by the lessor. Next one, tax benefits. Depending on the accounting and tax regulation, each and every state or each and every country, they have own tax regulation or rules and regulation. A lease payment may be a tax deductible, okay, providing a potential financial advantages for the business. Next one, hire purchasing meaning. Hire purchasing is a financial agreement that allow an individual or business, the hirer, to acquire an asset by paying a installment over a time. If any particular asset they want to purchase, the complete payment is not required. There are number of installment which is provided. Okay, the payment is done by the hirer, okay, who is hiring a machinery. The ownership of the asset is transferred to the hirer upon the completion of all the requirement payment. Suppose the machine cost is 10 lakhs. The 10 lakhs, those who are selling is giving equal installment. Suppose 2,50,000, 2,50,000, along with the hire purchase, the principal amount we are paying for interest extra. Until the final payment is made, the hirer has possession and the right to use the asset. Okay, moving for the functions of hire purchasing. The first one, ownership at the end, because the final settlement will happen last installment. So one of the primary functions of the hire purchase is that provide a pathway to ownership, which is showing the pathway. Okay, so the first installment he cannot get the ownership title. As their hirer make installment payment, they are working towards owning the asset outright. Last payment is getting a ownership rights. Spread payment, complete amount is not paying one payment, so is going to pay for installment basis. Instead of paying full cost of the asset upfront, hirer can spread the payment over a fixed period, okay, according to the agreement. Making a more manageable individual business with the limited immediate financial resource. At the time of purchasing is not going for investing completely, so better is try to go for installment. So the hire purchase is a very useful for the businessman or individual. Now, flexibility. Hire purchase agreement offer flexibility in terms of payment, okay, and structure. Okay, so something like those who are going to sell, they are preparing the condition, terms and condition. This terms and condition, if it is not agreed, so slightly some modifications are done, and may include options for the bullion payment at the end, allowing for the lower monthly payment during the terms, okay, whatever the time is given. So next, fourth point, maintenance and repair. The maintenance and repairs which is undertaken by the hirer, so the whatever the cost is incurred for the machinery, so the hirer want to bear. So the responsibility of maintenance and repair may be rest with the hirer, because he is using a machinery, you want to bear the cost. Giving them control over the conditions of keeping of the asset. Okay, you want to go for always maintaining. So next one, housing finance. Housing finance, which is mainly focusing for housing. So the housing finance refers to the provisions of fund or financial assistance, especially for the purpose of acquiring and construction or renovating residential property, not business property. Housing means actually which is always talking to residential property. It involves the lending and borrowing activity associated with the real estate with a focus on meeting the financial needs of individual or entity seeking to purchase or improve home. So obviously we are encouraging those who want to go for construction. Next one, the housing finance function. The first functions, which is facilitating home ownership. So we are providing those who are keen interested to go construction for residential purpose, so which is giving a home ownership. One of the primary functions of the housing finance is to enable individual to own home. Next one, investment in the real estate. If they are going for investing, of course they want to get the finance support. So at the time of going acquiring land, obviously they are getting the benefits. By providing a loan to the property for development and construction, and housing finance contribute to the growth of the housing market, because we need to promote the house. Obviously they are getting a finance support, creating an economical opportunity and addressing housing shortage, because everybody, they don't have own house. That means actually whenever they are planning to go, so they can approach with the housing finance. And the risk management. So here the lender, whatever they are trying to go for investing in the housing property, house related product, so which is a lender engaging in the housing finance often access and manage the risk associated with the mortgage lending. So whenever you try to get a finance support from the housing, obviously want to go for mortgage in the sense providing a property documents. Okay. And the secondary market participation. Obviously, they are trying to go for secondary market participation. Housing finance institution may engage in the secondary market, where they sell mortgage-backed security. Next one, policy and regulated compliance. Any financial instrument which is regulated or policy or frame for just for monitoring or performance checking. So, housing finance entity operate with a framework of regulation and policy designed to safeguard the interest of borrower, because everybody, if they are trying to approaching with the housing finance, they are always bothering about this safeguard. Okay, so this is a specific, any regulation is there means they are getting a safeguard. And maintain the stability of the financial system. Okay, instead of going a lump sum amount payment, it's very difficult to go for investing. So that's what they try to go for installment basis. Like, okay. Next one, chit fund. What exactly chit fund, which is also coming under the non-banking finance? A chit fund is a financial arrangement where a group of individuals come together to pool specific amount of money at regular interval. But the group of peoples are raising a fund. Okay, so the collected pool is to awarded for one member and chosen through the auction or lottery during each interval, because 1 month bit will be happening. So whoever required finance, okay, so definitely they can quote here. The functions of chit fund, the first one, which is a saving and borrowing, no doubt we are investing, okay, which is a future benefits. Auctions and lottery system, there are, for example, 20 members are there, means there is something like actions or lottery basis, they can get the chit fund. And group support, which is completely group support. Okay, one person is not paid, means actually which is very affecting for the group. No interest system, there is no interest system, but the payment is settled based on the lottery or auctions. And the regulation and legal compliance, which is not regulated. And flexible withdraw. The flexible withdraw, suppose one person are requesting for this month, next person can request for the next month. Risk mitigation, we can reduce our risk because we are paying for. Next, facility of small scale investment. Obviously we can find out the facility. Keep on watch for next section. Thank you.